We are live, yay. Oops. What's going on, everybody? How y'all doing tonight? Yeah, Chuck, you don't need to see the web app in OI. You just need to look at the centroids to understand what the path of those are projected to be out in time. Your thought process is right. Looking after the London close, 11:30, 12 o'clock, see if there's some kind of pattern forming, right? Converging, chop sideways. Yeah, what the case is. Hi, Paul.
Hey, buddy. Merry Christmas.
And to you. Yeah, Chuck, you can certainly look at that too, but you know what's important as well is just understanding what price itself and speculation is doing. A lot of the time that is centered around strikes though with meaningful speculation at them. Chuck was just going through his little framework for zero DT butterflies.
Yeah. Yeah, so the comment, I think it's a trade from noon to 2, check MTM to see if the CT is flattening, check centroid to see if the put call vols. Yeah, not so much the volume, although, I mean, it's always important, right? But I think the front part of your statement, Chuck, is spot on, right? So check the MTM. It was kind of choppy, right? It was okay. It wasn't up or down dramatically, right? You can see right there in the middle of the bowl there, it was kind of horizontal. And then check the centroids, right? So the spec P, so speculation slope chart there. Let's go up one more, right there. Yep, that one right there. The one that's got the blue and the yellow trace on it. The SPX speculation slopes. Click on that blue link if you would there, Taylor. Yeah, that one, cool. That's perfect. No, that's perfect. That's fine. Just click the image. That's fine. Yeah, so when those things start flattening out, and you can see right around noon Eastern time, that gives you a sense. You can see that that's a change in character in what the market is doing intraday. And price really wasn't moving in that spot. It's not on this chart, but it was on the other chart. Those are the times to start thinking about what would benefit from a lack of movement, and that's theta decay. So in order for us to take advantage of theta decay, we want to be short. Right? You want to be, if you're long in an option, theta decay works against you. If you're short an option, theta decay works in your favor. So what are short strategies? A butterfly, a broken wing, things of that nature. So I think you're spot on. I think you're moving right into the right area. So the question becomes, do we put an iron condor on if we're at one end of the range, and then we think we've got some, GE has identified some levels on the downside or on the upside, and we touch those levels, then do we leg into an iron condor? That's always an option too, right? So you would get maybe $1.50, maybe $2, depending on how close to that level we got. And so you might be able to squeeze $4 out of an iron condor. So that could be one way to play it. Now on Friday, we played it with a butterfly. And I think that's, because you've got 2 short strikes in the middle of 2 long strikes. And I think that's a good way to look at it. So, yep, check centroids, see that the ROC is flattening. That's that second number that says ROC, of course, right? And there's a table. I mean, we have it graphically. Excuse me. I've got a head cold here. We've got a table in that channel. We've got, obviously, graphs here. And your eye is a great filter. Your eye can see it's flat, right? And so, yeah, if you scroll up a little bit there, Taylor. Keep going a little bit more. There's a table in there. That one. Yeah. The blue. You'll need the blue one, actually, yeah, because that later in the day it scrolls off and then scroll up. There you go. Yeah. You can see the ROCs are all hovering, right around 0, 001, 002, plus minus whatever. So flat.
Yeah. Yeah. Yeah, I mean, the other thing too, I mean, sometimes it's as simple as you could show a 5-year-old the chart midday of this and be like, all right, where's price going? And they're like, it's going there. And you know what? That's pretty accurate too, right? As Paul said, it's a very good visual as well. So sometimes I look at it and I was like, oh, price is probably going there unless something else happens. So
yeah, I think Jim Bland or someone called it like midday, called it like at 69.29. Would we end up at 69.28 or something like that?
Yeah.
Anyways.
Chuck, does that answer your question? I guess you didn't really have a question per se, but you had more of a. I can't think of it. But Chuck, we're going to assume that does, unless you come back in the comments. Feel free to do that. All right, welcome everybody. All right, just our usual open mic tonight. I know we had, relatively slow week in the markets last week. I think, another holiday impacted week this week. So be sure that you are cognizant of market hours and your positions and all that good stuff as we approach each day. That helps. Yes, looking at that doesn't help much. So yeah, I mean, we'll just go through the rounds a little bit here. Look at the market trend model. We'll look at the web app. If you guys have any questions on individual stocks, we can go through that. Any questions on the tools, happy to go through that as well. Right, it's kind of up to you guys. The extent you have questions, we can knock those out. Last week, update wise on the web app, really. I think the biggest thing probably implementing was the kind of heat map on the expirations. This is just an easy way to kind of see visually where the meaningful speculation is in the complex on an synthetic open interest basis. Paul pointed this out earlier in the week. I didn't even know that you could click on these quartiles down here and it isolated those. So that was pretty cool.
That's actually an incredibly powerful. Let's just stop there for a second. Click on that. Click on the upper 25. Yeah, the right one there. Yeah. All right. So what are we looking at here? You're looking now. Go to the very, very top. What's it say? 81% of the total OI of the complex. So if the SPXP, these are the dailies, weekly. SPXW is how it's listed in your brokerage, or SPXPM. SPXPM is how it's listed, depending on who your brokerage is. 81% of all of the contracts are in that area there. All right. So why is that important to us? That means, and you've only checked the top quartile. So this means that all of those in aggregate together comprise 81% of where all the speculators are betting. Now, why is that important in your decision process? If you click other tiles, you're actually going where the minority is. We want to be where the tail is wagging the dog. All right? So I've been playing with this a lot. And I've got some Python code that's dissecting all this stuff. And I can tell you categorically, when you click that upper 25% quartile, that's the tail wagging the dog. So here's your the implications to your trading. If you have a sense of this, screenshot it, do whatever, use the little camera tool, and you can get a view of that, so you'll know what those powerful expiries are. If you go off of those, what quartile are they in? Click the one next to it. That's going to be the second upper. Yeah, that one. Yeah. All right. So this is 50 to 75%. All right, and you can see only 14% of the entire complex is contained there. That means these two, 81 plus 14, 95% is contained in the upper 50. So you can hold down the control key and you can select both of those if you want. Oh, maybe you can't. I thought you could. My mistake.
Yeah, no, all good.
Okay. Anyways, those two contain, so 95% of everything is in there. So that means go down to the leftmost one, which is the lower quartile. Right? It's all out in time. Not that you're going to go looking for those things. Click the one next to it. That's going to be the 25 to 50. There is closer there, like 1.6. It's kind of surprising, right? So just be aware that the expiry you're clicking on, if you will, go over to NVIDIA, for instance, or go over to Apple or something. NVIDIA's always a good one. Apple's a good one. Yeah, select all. All right. Now, go ahead and select just the upper 25. Okay. Look at that. 5 expiries. This is where the market is concentrated for Apple. Now go select the second one from the right, the 50 to 75. There you go. So this one coming up for 1/2, January 2nd. That's this coming Friday. And then we move out into April. Wow. So when we talk about path dependency, that's another topic we can get into at a later date. You want to have a sense of what tail is wagging the dog. And this is a tool to give you that sense of, I see that next week or the week following is giving us, a major shift in GEX levels. But if it's in the lower quartile, or the lower half, it's probably not the tail wagging the dog. I don't know. Thoughts, Taylor?
Yep. No, I think about it the same way.
It's
kind of the intent of it.
Yeah, I think it's a great way to visualize where should you be paying attention and making decisions.
Yep. Yeah, I think one metric we don't have on here yet, right, is our metric for determining if the stock is even kind of influenced by the options market, if that's even relevant, which is kind of an overlooked thing that some people understandably miss, but Apple obviously is. I mean, almost 5 million contracts there. And once you establish if it is or is not, relevant to options, market dynamics, all that good stuff, then kind of understanding, okay, what expirations are meaningful in the name.
Yeah, Chuck said looking at the web app doesn't help much. I disagree, Chuck. The web app will give you key levels. So if you go back to the SPXP there,
SPXP, sorry, wrong screen.
no problem. Thanks for driving. And just select the next, just select like 129. Yeah, that's fine. That's cool. All right. So when you're looking at this, Chuck, and if you're thinking about legging into an IC, for instance, midday ROCs are stable or flat, this is where your levels are. So I think the web app actually provides you a tremendous amount of information in your decision tree. So it's not just looking at spec PS or the vol-m commands, but it's also looking at this and making sure you have those from your pre-market routine, right? I'm presuming everyone listening has independently created their own SPX game plan in the morning before the open, and then looks at mine. Between the two is probably the truth somewhere in there, and has a plan together, right? So watching that, I have a screen that's completely dedicated to what's on your screen right now. And throughout the day, I just periodically update it. I just want to see how the levels move. So hopefully that helps clarify that.
Yep, 100%.
I would be flying blind if I didn't have the web app during the day. Seriously. And I'd be flying blind if I didn't have vol-m and things during the day too.
Yeah, I really like using the web app pre-market plan, right, to establish what the kind of first goalposts are.
Yep.
And then using vol-m to understand what the speculation is like. And then once we kind of breach through one of those goalposts, then I like to go back to the web app to understand, all right, now that we've broken free, what are the next kind of logical levels, either to the upside or downside, given how we broke? And then is the volume commands, is the market trend model supportive of a continuation of the move of the break?
Yep, 100%. Yeah, you nailed it.
Is that helpful, Chuck? So people that don't know what I'm talking about, right? So the market trend model built off the tick index. You write a measurement kind of under the hood of buying and selling being presented to the exchanges. On an intraday basis, that bold white line is the kind of unfiltered. The cyan line up here is a filtered tick. So what that means is, this is only moving if there's significant buying and selling being presented to the market. So like, well, this is a bad example because this was a good example. So like massive buying throughout the session on Christmas Eve. This flattened here because the market was closed, but that just continued higher. And then Friday, a little bit of, filter tick selling, but then, that subsided by, 12:30 and basically flat the rest of the session. So that's helpful to understand. And then, so you kind of understand what that's doing, and then you can kind of connect that with, let's just go to this real quick, right? We have a bunch of different iterations of volume. So when we say intraday volume analysis, we mean SPX 0DT, right? Because a significant amount of speculation on a day-to-day basis occurs in the 0DT markets. And so what we do, right, we plot centroids, which on a 5-minute over 5-minute basis, we bucket that volume. So like in this example with this timestamp, there was a question on Friday, 1550 means from 350 to 355. That is the volume that we are capturing here. We find right the middle of that distribution, which is the centroid, and we plot that. And we plot those every 5 minutes. We connect the dots, which are the solid green for calls, solid red for puts. And then, we can kind of understand what the behavior speculation is. In the case on Friday, kind of converging between calls and puts, just classic chop day, right? Again, that was supported by market trend model, was fairly flat as well. And then this dashed line is the lines of best fit. If we go, we'll just go. This is our automated channel, so we produce a lot of charts here. So lines best fit, here's an example from 1240. So this is 1240 to 1245 bucketed volume. Those lines best fit, right? Linear regressions off of the centroids that have been plotted from the open to whatever point in time we're looking at here. So this is 1245. And right, assuming all else equal, if we understand what speculators have done from the open to this point in time, we can infer how those centroids are going to progress throughout the day. And right, price follows where transactions are transacting. And so, right, again, a very good way of helping us craft those intraday trades, as Paul was talking about earlier in the session, right? We have those other derivative tools like the SpecP, SpecPS we were looking at earlier in the discussion tonight, and that can help us to inform, right, whether you're a premium seller, understanding where price is likely not to go. If you're an intraday scalper, understanding kind of what the day is shaping up to be, right? So, this was very much a choppy price action. So that should inform kind of your expectations of, being quicker on the trigger as opposed to, for some reason expecting a trending move, which clearly wasn't happening here, just based off of how speculation was transacting. And so, right, this tool is very powerful. It's kind of the pillar of our intraday SPX trading. And then obviously, right, that's centroid, just kind of a simple one for folks to grasp. But then we have other, derivatives depending on how you like to visualize things, right? We have data tables. This is just looking at the volume of call and put speculation. And then again, this is kind of looking at, the rates of change of the centroids. And then that's what this chart is getting at as well. And then we have our spaghetti models here, which is like a kind of more granular look into the centroids itself of, like C10, C50, C50, this red line means that 50% of all call speculation is at that point in lower. Isn't that right, Paul?
Yep.
Yeah. And then like C10 is all 10% of the speculation is at that point in lower as well. So,
right. This is, if you think of the speculation as being kind of bell curve shaped, the yellow lines kind of represent where the tails are, and the red line would be the middle, kind of the one half of the bell curve, right to the very, very peak. So you're looking at how tight is the distribution. So looking at this chart, if you go back before 11 o'clock, you see how they're all really, really, really tight together. It's because everybody was betting on the same horse. Everybody. They were all stacked on 59.50 in that window.
Yeah.
Sure, there was some 45s and sure there was some 55s, but the majority of them were sitting on 50, and that's how tight they are. So that tells you, again, looking at things, this is kind of where monetization's potential really starts going up, because you got a lot of speculators who are betting on the 50 strike. And how do we know those are opening or closing? We don't. But price generally confirms what's happening. And you can see that we went up to 40 in price as we got into that. And then we came back down a little bit. And then we went back up to 40 again right after 11 o'clock. And then we came back. And that's when it started to disperse. Speculation got wider, and some of those calls probably got closed.
Yep.
Everyone gets so wrapped around, oh my God, is that an opening trade or is that a closing trade? And I'm here to tell you it doesn't matter. It really doesn't matter.
Yeah, 69.50, right, is being hindsight quarterback for a minute.
Yep.
In my spiel that I always say, like, don't care about hindsight quarterback, because, right, all the teams that play today in the NFL, they're going to go watch film on Monday. So,
no doubt.
Not a waste of time to do it, right? But 69.50, right, that's a key kind of upside level in the pre-market prep. And so if you are, a premium seller, all that good stuff, right? Understanding, 59.50, kind of the key drunken tailor range. And then at that chart with the speculation, right? Even though, centroids were well below 69.50, that chart we were just looking at was below 69.50. So probably weren't getting above 69.50 for that day.
Yeah, keep that chart open a second. I see Chuck posted another question here, and I want to talk a little bit about that. So when I'm having you look at OI, I'm not having you look at OI. I'm having you look at net OI. All right, let's be crystal clear. You could remove call OI and put OI, but if you did, you wouldn't know what was long or short. That's why I leave them on my screen, and this is the default screen that I use through my trading all day long. Right?
Yeah.
That net OI, I want you to look really, really carefully at the 69.40 strike. All right, when you look at the 69.40 strike and you carry that across, that's where minus Gex is in that picture. Right, and there's a short strike right there. Okay. If you go down just a little bit, and that's a negative number, synthetic net open interest, right? Because we adjust for known shorts and longs throughout, the structure. That's why you can have negative OI. Oh my God, what a concept. When you do that, it indicates, in this particular case, it indicates the potential to pin in that particular area. So Chuck, one of the first things you want to do is you want to identify the strikes that are controlled by short interest. And that's why I put those arrows that you see on the chart just to call your eye to those negative signs. Doesn't mean necessarily that we're going to pin there, but there's always potential. And I know you're new, in the technical questions area, we discuss how does short interest become a pin? Why is it a magnet? Okay. There are cases where that is important. It was possible from the cheap seats of Friday morning, not knowing what the market was going to do ahead. Nobody does. If you're here looking for a gamma edge crystal ball, this is about as good as you're going to get. And I challenge anyone else out there to know how fear and how greed and speculation during the day are going to shape the markets. What we can tell you with a very, very high degree of accuracy is the structure and what is the art of the possible. We do this every day. The art of the possible says that because of the net OI being negative between two major areas, that could be a pinning strike. Pay attention. If it's a pinning strike, that's a butterfly strike. There is potential that you could be there. Now, there's something else going on here. Right below it, you've got 21.26 sitting at 69.35. You've got 330 contracts out of all the SPX landing on Friday. Only 330 net are sitting there. And then you're back up to 2,574 sitting down at the 69.30. So you got a 30, 35, 40 structure where you've got minimum, maximum, minimum. And then if you look down at the 25 strike, and 25, 50, 75s, the quarter strikes are always where the big boys and girls, where the algos go. So you got to think 25, 50, 75 are something I want to pay attention to. And what did we do? We kind of just hovered in that area, which was pointing to 20, 25, 30, 35 through the day. Well, what is that little bowl? I don't know, Taylor, if you can show it on the screen, pointing between 35, 30, and 25. Yep, over on the net OI column, right there. Yep. So that little bowl is another area where we often get trapped. And if there's no volume, this is why I was saying check volume. If it was Friday after Christmas, if there's no volume coming in, these things are just, depending on if they're in the money or the out of money, they're either going to grow or they're going to collapse or they're going to push, pull, or whatever the case may be. But we're going to be right in that area. That is, in fact, what happened. We just kept bouncing between those relative areas there. That is another pinning possibility when you have a shape, a bowl like that. And I know this sounds like it's mystical or magical. We've been doing this for years. And people say, well, wait a second, of all the volume in the 0DTE, it obliterates the structure. There's no way. I am here to tell you nothing could be further from the truth. You have to remember, especially on a Friday, that the majority of those contracts were placed long before the Friday ensued. All those speculators had a reason, and they're not there willy-nilly just to start moving their trades around. They're part of whatever structure they have. We see it every day. We see this behavior. So the rationale behind looking at the net OI is that tells you who's in control of the structure. It tells you are the call holders in charge? Are the put holders in charge? Or is the positive delta going to be in charge? Or is the negative delta going to be in charge? What's above? What's below? Is it a pinning strike? When you start repeating this process, you'll be able to look at almost any structure and know instantly what kind of condition we're in, whether the markets are favorable for being a bull, being a bear, being neutral, transition zone. All of that will just jump off the page at you within seconds because you'll have trained your eye to those different conditions. Until you start planning like that and seeing where you're wrong, it's not going to happen. Right? You can't rely on me, you can't rely on Taylor, Mike, to tell you what the structure is going to do. So look at the net OI and start learning the various structures that are there, and I think you're going to just pay yourself in huge dividends as you move forward. So wrapping up, summarizing, watch net OI. Net OI, if you're above P-trans, that means something. If you're below N-trans, that means something. If you're within Drunken Sailor, that means something. Look for different divots and big, like what we call ledges or these pinning strikes. Look for those things. After a while, it'll just start coming naturally, and you'll be there. I promise. It will come. We do it, right? And we're here to answer those questions and tell you what we're seeing. You are drinking from a fire hose, and you're doing a great job, actually. So the fact that you're out there and being ballsy and asking these questions is 100% the way to do it. And this is how you maximize your learning curve and maximize reducing your learning curve. So the nice thing is you got willing people here to, not just us, but you've got people in the Discord who are willing to help you learn those different patterns and structures.
Yeah.
And so for the folks who aren't members who are watching this is what we do. I mean, teach a man to fish or teach a person to fish, man or woman, right? This is what we're doing, right? We want you to be able to read the complex, and when we say complex, it's the option structure, the options complex.
Yep.
We want you to read that on your own. We want you to create your own plan and then see where it gets invalidated or where it is validated. So, and give us feedback, right? These tools are a reflection of what you guys and gals have asked for. So this is about crowdsourcing 101 right here. I mean, you ask for a tool and we put our noodle cap on and we go away and we come back and present it.
Yep, 100%. On that note, really quick, one thing that we're going to be introducing this week is the folks on. So, some people complain about, screen space. So something we're going to do is we're going to have this button here so you can expand and collapse the right-hand pane, just making more room for you. Then you can get rid of the expiration pane, so then you have nothing but as much dashboard as you want. So that's I know it's not necessarily like data per se, that's more of just like a quality of life update, I would call it. So be on the lookout for that. Looking into 20, right, we made I think we crammed all of our 2025 development in about the last 3 weeks of 2025. So not going to be the case in 2026. Got a good development team in place, and we're definitely going to be consistently rolling that out. Right. Start of 2026, we're going to be working on creating a true canvas experience in the web app. So, right, you're going to have different containers where you can put different widgets, right? We're going to start to widgetize the various visualizations in the Discord. Like Vol-M is an example. It's going to be one that you'll be able to get in there. So, theoretically, you should be able to have, the dashboard, some portion of the dashboard, then you can have the Vol-M, somewhere there. You can have the net stat, whatever. So that's something that we're going to start working on here after next week. Another thing, we get a lot of API or a lot of historical data questions. API is something on our roadmap for 2026. Not a simple thing to build out, but it is on our list to get to that eventually. There's a couple tools that are ahead of that. The Unified Delta tool, things of that nature before we get to the API. But that is something on our list. In terms of actual trading as well, we've hit a lot on 0DTE for those swing traders out there, or folks not wanting the rush of 0DTE. We have a couple different things at Gamma Edge, right? One is our P-Transit plus GEX strategy, 100% mechanical, really underpins everything that we do at Gamma Edge, kind of proving that the underlying philosophy of Gamma Edge and the relevance of the options market is solidified with that strategy and the back testing of the strategy. On our blog, we have an article on the strategy, and then every day we post what the entries and the exits are for that strategy the night before. So like Sunday night tonight, we know what we're going to be doing on Monday. I don't know if it has not been posted yet, but we'll get to that, and then we will know. I mean, you could run the scans right now if you wanted to, but anyways, right, and then our trade log from since July of 23, we're coming into the end of 25. You can say year to date, up on the year for the strategy, win rate, pretty in line with since inception, and the backtesting high win rate strategy. So you get the positive expectancy there. We also have the wheel strategy, right? The wheel strategy, very common options-based strategy, but we put our twist on it in terms of filtering for the criteria of stocks, because there's a bazillion stocks out there you could trade. So we have the Gamma Edge filter, right, looking for strong call dominated stocks. Do that through a variety of our different scans that we have. We kind of unify that into a single scan. We also incorporate the Minervini trend template, right, because that's kind of a institutional momentum indicator, for lack of a better term. So, if you have, positive momentum to the upside, call dominated, constructive options dynamics underneath, then, a very good way to help with narrowing down those candidates. And we know that can be a very capital intensive strategy. So we are working on supplemental strategies as well that are not quite as capital intensive, but kind of hit at the same objectives. So when we are ready to release that, we will let you all know, as Paul introduced it today, and I was just talking to him briefly about it. A lot of you guys are going to be familiar with that strategy as well too. What else do we have? So those are kind of the two mechanical things. Another thing, swing game plan, something I post every day. Well, not every day, but most days. The goal of this is just another way of kind of on a discretionary basis helping you guys narrow down what stocks could potentially be interested in. The way I've kind of ultimately arrived at that right now is because I'm most comfortable with Excel, is the scatter plot. So this just helps us quickly identify call dominated stock, looking to see where in relation to P-Trans, which is our upside acceleration zone, and then plus GEX, which is kind of our first upside target, where those favorable risk to rewards are. So like as an example, Schlumberger on Friday, 1% to P-Trans. It's above P-Trans, 1% to P-Trans, 5% to plus GEX. So, just looking at this scatter plot, that could be an interesting example. but all the way over here, if you're looking at RTX, I forget what that name is. But anyways, that was like 5% downside to P-Trans and 1% upside to PlusGex. So, maybe not as ideal risk to reward. So just something helpful for you to look at there. We do that for call dominated, put dominated, and put dominated, if nothing else, just stocks you really don't want to have on your long watch list. For the core scatter plot, just think of that as kind of large liquid names. So that's going to be all your Mag 7 and other large components of various sectors like JPM, Exxon, Eli Lilly. Whole point of this is just have a consistent set of names and just understanding kind of how they're moving on a day-over-day basis. And then I also just like looking at the same names every day, as opposed to trying to look at different names every day. But that's just a preference and trading style. And then we just have sector ETFs as well. So again, just kind of looking to see most sectors above P-Trans, below P-Trans, distance of PlusGex, all that good stuff. So it's really just meant to be quick, really takes you a couple minutes to look over those to hopefully get some trade ideas for you as well. So that is really everything I guess I had planned to talk about right now. I guess just looking at SPX in isolation. Keep in mind we'll be getting the overnight updates tonight from the OCC. Then that'll inform us your DT tomorrow. But looking at the full complex right now, 69.30. It's kind of where we're trading in the overnight session right now too. Call dominated above the spot price. Right, we have all expirations turned on. PlusGex 69.50. Top of transition zone 6,900. So kind of right in the middle between PlusGex and P-Trans at the moment. The market trend model. That bullish momentum signal is turned on, right? So our mechanical strategies are open to looking at new positions, and that turned on at this moment in time right here, which was on 12/23. That's continuing to be on. So, just looking at SPX, looking at the market trend model, conditions look fine and dandy right now. Well, I don't know if you have anything else to add at the moment.
Not really. I know there was a question, I'll get to it up in technical questions about whether we're at the market or at the top of our sine wave. And I don't know if you want to talk a little bit just about the sine wave, right? There was some context that I referred to on Friday about the sine wave. And we tend to see an increase in short interest when we are either at market tops or at market bottoms. So let's think a little bit about why we watch that and made that particular comment. The question in mind specifically asks, why does gamma impact the overall volatility, and why do dealers tend to buy the dips and sell the rips when we're in that positive gamma, when they're in a positive gamma type environment? I think in the big picture of things, we do believe the market flows more or less like a sine wave. So that part is real. I do think we're in the top phase of a sine wave cycle. Now, are we at the top? Nobody knows for sure, right? I mean, speculation is a powerful thing. The market climbs a wall of worry. Why is that? It's because when you think you're at the top, everyone starts buying puts. And what do those puts end up doing? They end up decaying, and that provides charm support. And the more puts we have, NGEX, POI, NTrans, and all of that, we now have defined levels where all that speculation is, literally within reach, within a day or two reach underneath us. And so that tends to prop us up. So why wouldn't I short puts below that if I know I'm not going to go there? So completely explain when you're at a market top why you would actually see short puts. So when you're short options, you are effectively, in our particular case, we're negative gamma on our side, which forces the dealers positive gamma for those short options. And that when they're in that particular phase, when they're in that positive gamma as prices move up, right, they are realizing more delta as prices move up because they're positive gamma. And as they see more and more price appreciation because the market is speculating to the upside for whatever reason, they're getting longer and they have to sell. So they sell the rips. So as price starts falling, the opposite happens. Then they have to buy the dips. That's why volatility becomes stabilized. So when we have short calls above and short puts below, and we're at the top of that sine wave, and Taylor has a graphic in our fast pass that really describes it. It's just a nice little undulating sine wave. I don't know if we're at the top. That was what the question was. Are we at a market top? Well, we're in the top phase. When we see more and more short interest going in, we have to pay attention. We have to. And what are we seeing? We're seeing a 13.5 handle on VIX. That's pretty compressed. So, is the market going to fall apart tomorrow? No. But is the market potentially, yeah, there's the sine wave, perfect. But is it possible when we get a shift of an expiry, what do we have coming up? We have December 31st. We have a lot of window dressing into December 31st. Everybody's got to make their numbers for 2025, right? And so we're going to see some interest changes. And then we have 1-2, January 2nd, right? We're going to come back from a holiday. We're going to be on the Friday. And we have, as you saw, as you stepped through the upper quartile, we have 1-2 is a fairly big expiry for a lot of stocks. Okay, now what happens? Well, now if you are removing a lot of calls, where are you removing those calls? Are they speculative calls? Out of the money calls? If you take away out of the money calls, there's no counterbalance to the in the money puts. And all of a sudden the overhead gets heavy, really heavy. So in that sine wave, can you throw that sine wave back up there?
Sure.
So in that sine wave, calls declining. Very, very possible that can come and result because of the calendar, the expiries. So we will be watching alongside with you and watching for those shifts. And we'll let you know what we see and you let us know what you see. It's pretty straightforward. But I think everyone should go ahead and fast pass. You should grab this graphic, understand this graphic, and you should post this graphic as your background on your screen, because this really does capture the undulating movement of the overall markets. Now, we could always enhance this and put, where do we see short interest? You see it at the top and the bottoms of those markets. In the middle, you see a lot of fast dynamics. Why do markets rip down? It's because the dealers are selling as the price drops. They have to, because everyone's buying long puts. Long puts on our side is long gamma. It means the dealers short gamma. As price falls, the dealers are getting shorter, right? So now they've got a big issue. So you want to look at that in some detail there and see what's happening there. But I think this captures it really, really well.
Yeah, the other thing I like to look at too, a couple of our other simple supplemental tools that we like to hit on. One is, looking at the true zeros.
One of my favorites.
Yeah, I mean, spot price is pretty well extended from the true zeros. That doesn't mean that spot price has to mean revert to that tomorrow. But again, it's just situational awareness of where it is in relation to that. Right? And just eyes you filter, we can see that price doesn't hang out for an extended period of time, well extended from that. So just keep that in mind. The other one is the GEX ratio. This was looking back 100 days, right? GEX ratio is just a measure of cumulative call gamma relative to cumulative put gamma. So you can think of it like a put call ratio, but better in our opinion because there's a time component to it, which is
Much better.
Which is through gamma, which is why we do it this way. You can see it's at 2. So, kind of a 2-to-1 ratio call to put gamma, looking back in time. That's a pretty elevated level based off our back testing, elevated level. So again, not to say that spot price has to collapse because this is at an elevated level, but just kind of taking what Paul was saying, as well with the true zeros we just looked at, and then the GEX ratio as well. Just kind of a way you can use the tools, paint a little mosaic for yourself to understand a little bit of context to ask kind of where in the sine wave are we as well.
100%. That's all I got.
Yeah. And then, last point too, I guess, just kind of in the con as well, as those metrics kind of start to get, I guess, extended for lack of a better term, or kind of pointing towards the top of the sine wave, then, the closer we get to plus GEX, if it 69.50, we don't see evidence of that, shifting higher as well. Just kind of another way of understanding kind of where on the sine wave we are. So yeah, I guess that's kind of all we got tonight. I don't see any other questions, so made it almost an hour. Well, I hope you get feeling better. Hopefully it's nothing too serious.
I think I picked up crap at the pool, of all places. I think water got in my sinuses and it was pool water.
That's crazy.
Sucks.
That is, yeah, was it just today?
No, this was last week.
Oh, that's the worst. So it's just been lingering for a little bit?
It's been growing.
Oh my God, that's the worst.
It is the worst.
Yeah. Damn. Well, sorry to hear that.
Thanks.
Not that it does much for you, but hopefully it gets better soon. So.
Yes, sir.
All right. Cool. Well, with that, I appreciate it.
And on that happy note.
Yeah, on a happy note. So those of you that don't have that, be thankful. Yeah, that's all we got to talk about tonight. So with that, appreciate the time. We'll talk to y'all later. So thank you.
Thanks, Taylor. Thanks, everyone. Really appreciate it.